Before
Okay.
anything,
Go. Silver.
3, 2, 1. Wait, what? All right, 3, 2, 1. All right. If you're someone who's looking for absolute maximum leverage in the silver market, we're going to show you how to do it. First, what we're doing is we are finding our top silver miners. Me and Justin's favorite is First Majestic. If you go on their options chain, you can go at 800 plus days and go pretty far out of the money and just buy options. Like, well, different layers. You can first buy out the metal. That is, you're not going to get rich from buying the physical silver. You're going to stay rich, and that's going to where you're going to hold the least amount of risk, and you can hold it forever, and you will, I would say, guarantee to preserve your wealth. Or you can buy a silver equity, which is going to, instead of getting you leverage, instead of holding the physical metal, it's going to be a lot more liquid and easy to transact in. If you don't want that and you want to buy some of the miners, you can buy the miners, and that has a lot more leverage than the actual silver itself. If you really want, you can go down and you can get into the junior miner space, but that's not really where I like to stay in the blue chip miners, and then go into the option chain and get long dated call options, which provide absolute incredible leverage. Let's go through some of the fundamentals. Justin, right now, silver mining companies can get silver out of the ground for about $10 to $11 an ounce, and they're selling it for $20 to $25 an ounce. That's already a 2-time spread. If you're bullish on silver and you want to go to, say, let's say silver goes to $50, their return on investment, their profits increase while their cost does not.
Yep.
Can you
just to kind of put some to put some color on that, what that really means is that the fixed costs are relatively high when it comes to mining, but the variable costs are going to be low. Now, there's still, of course, variable costs, but the point is, once you cover your fixed mine cost for the operation, every additional ounce or every dollar that goes on top of that is a sense pure profit. In other words, the silver price could go up. If it costs them $15 an ounce to pull, or $15 per ounce to pull 1 ounce out of the ground, and if they sell the ounce for at least $15, they're breaking even. If they're selling it for $25, they're making $10 of profit per ounce. And if silver shoots up to 100, now they're making 85. That's the case. And you could say, well, listen, what about if inflation suddenly spikes up and, labor costs shoot through the roof? Okay, so be it, inflation shoots up. Now their cost of bringing out of the ground might be 25, but if silver shoots up to, as a hedge against inflation, or gold, if you want to say that, then all of a sudden you've got this built-in hedge that should increase. That is, the price of the metal should hopefully exceed the pace of inflation, and that's going to be reflected in the stock price. And to kind of build on something you said a little earlier, one of the ways that you can really leverage up, if you really want to go maximum on this, is you can do the option play, because that gives you leverage on top of leverage to the stock price of the miner, and the miner itself gives you leverage to the metal price. So you're leveraging leverage in that regard. And Josh, you can't see my screen due to technical reasons here, but I'm looking at the option chart right now for this is January 19th, 2024, which is what, 800 some odd in the future, way into the future. In that case, the highest strike price you can go on First Majestic is 25. Right now, their stock's trading about $12 and change, $12.65 to be exact. And there's only 143 there's only 143 contracts right now at the $25 strike price, and their volume was only 6 today. So it's not a very crowded trade. The point is that if you're a small guy looking to kind of get a little bit of exposure, leverage on leverage, this might be something you want to look at. And lastly, what I'll add for First Majestic is they're an established silver producer. If you've checked out Keith Neumeyer and any of the interviews he's done, he's the CEO of First Majestic, very outspoken, very articulate. Dude knows his stuff. Point is, leadership seems to have a very competent head on their shoulders and a proven track record, and they're making money. And they can make money, let's say all the way down to the mid-teens if push comes to shove.
What's really interesting right now with the mining space is usually these companies are terrible. The gold and silver mining, for example, in the 70s, when the last great bull market, that they were terrible business models. They basically lost money on every transaction until the price of the metal actually started to go up. But we're actually seeing the complete opposite now. We have, silver. First Majestic has a dividend. They are in an incredible spot to where I don't really think even if the price of the metal continues to go down, I don't see silver, First Majestic or some of the great gold miners really tanking too hard, just because they have a good business model right now. But on the contrast, if we see the price of the metal go up and a lot at that, these companies could absolutely take off. And if they're taking off at a volatile rate to the upside, options I think are the best way to capture that. But there's portions of your portfolio for this. You have your super speculative 10 to 20 baggers with the options, but you also own some of the flat out metal. You own some of these blue chips. It's all about portfolio construction.
Yeah. And Josh, if I can, let me give you like 2 other ways to do it. For anyone who is one of our, or is into the crypto space, you might think about it like this. Owning the precious metals would be like owning the underlying like Bitcoin or, Ethereum or whatever, right? There's no staking, nothing like that. You just want to own the base layer. Nothing wrong with that. Very conservative, probably the safest play. And the more and more advanced you get, like if you want to go into, let's say, like some sort of like, high staking contract or whatnot, that would be kind of like a minor play. Or if you want to think about in terms of that people crypto understand this trade, that is, taking a long dated call option on a silver miner, that would be like opening, 100x, either short or in this case, I guess call option bullish for the price of metal. That's kind of the corollary draw on that front. Another thing I'll notice this too is that for anyone who's, today we recorded this on Tuesday, Bed Bath & Beyond ripped higher. Point is that if somebody's looking to allocate or reallocate gains and put it in a safe spot, the miners might be the answer to that. Or at least that's one of the answers I would
call it a safe part, especially not doing options is not the safe. It's not the safe bet. This is really for someone who is bullish on silver and likes these companies that wants the maximum amount of profit. And I'm not saying you would get more profit most likely or similar profit if you get that perfect exploration company, the company that you invest in. You get lucky. You invest in 10 exploration companies and one of them just happens to find the greatest silver mine ever. That is the same type of leverage you're going to get by putting on these options on the blue chip First Majestics. I just think it's a no-brainer to get elongated options on the blue chip mining companies compared to the exploration.
Absolutely. Yeah, and just let me just echo that too and say, like, absolutely. Like, don't get me wrong, I've got my speculative bets, but the only reason I've got my speculative bets is because I, to put it bluntly, blatantly cheated off of the real the real pros in the industry and thought, okay, well, fine, I'll roll the dice. Roll the dice for me is about $500, and I expect to lose. Let's say I have 10 speculative positions. I expect 9 of those 10 just to go bust, but the one that wins, I expect to win. This takes us back to First Majestic. It's like, again, forgive me for using crypto parlance here, but let's say the dev team or the development team behind the scenes. They've got a great track record. They're publicly outspoken. They've got a good head on their shoulders. Yeah, this is great. And the last thing I'll leave in closing with that is, and I don't know how to handicap this or how to model this in, but the GME or the meme stock people believe that hanky-panky's going on with DTCC. The metals guys believe that the same type of shenanigans going on with COMEX or LBMA and how metal is priced. So that being said too, in addition to, let's say, being whatever the macro trends are when it comes to commodities, if one also believes that COMEX will be broken, there is another catalyst that might send the price up in addition to the macro. But again, let's kind of put that under interesting to talk about, but probably for investing purposes, you want to focus on the macro argument